Rachelle Taqqu, author and financial consultant, had a column in the paper on Monday about this one. We wanted to get you on to talk about this, Rachel. The stock market may be riskier than some people think, right?
Absolutely right. People tend to get complacent, and people tend to think, most of all, that if you hold stocks for a long time, that all the short-term blips that you're even talking about iron themselves out. And that's really not right. I mean, the stock market is risky short run, the stock market is risky long time. It doesn't iron out, it just stays the same, which is not to say it's not a good asset, but it's risky.
Yeah. No, go ahead, George. Go ahead.
Your story pokes a hole at a lot of conventional wisdoms that are out there about stock ownership and stock trading. In doing the story, which one did you feel is the most misleading that investors take for granted?
Most misleading myth is really based on a book by the same name that is Stocks for the Long Run. People do believe that the minor fluctuations or the major fluctuations that they see in the short run disappear over time. And if your holding period is 10, 15, 20, 30 years, then you don't have anything to worry about. Then the risk goes away, and that basically stocks have a better return than bonds or other instruments. And so go for the big return. Risk is nothing if you have a long time horizon. Go for it. And that's really not right. It's just a big mistake.
Yeah, you had a good line in the column. Actually, I just want to read the line itself. You wrote, it does not do you a lot of good to have 20 years of great performance to be trounced in a crash just before you retire. That has happened to a lot of people the last 12 years or so. Now, all right, we've established that stocks are riskier than you think. What do you do about it?
The first thing you do is, before you even start to think about where to invest and what the market's like, you basically think about yourself and who you are and what you want. That's also another big mistake. Maybe I should even have started with that, is that investing is really, before you even worry about the market and getting educated, is learn a little bit about yourself. What do you want? What are your values? Do you want to spend a lot of money now? Do you want a lot of material goods? Do you want to leave a legacy? And what kind of resources do you have? What kind of human capital? What's important to you? And, that's going to make a huge difference in terms of guiding you to where you want to put your money, and how much safety you're going to want to have in your investment portfolio and how much risk. We call it in our book where you set your risk set point. And that really is going to have a lot to do with what your goals are. And you got to really think about your goals in terms of two pieces, and that takes a lot of thought. Most people don't really ever get around to this, as simple as it sounds. You got to think about, what do you really need? What can you really live with? Be honest. And what do you want?
Or do they need professional help?
Professional help is great. It's hard to find. But they need to talk to one another. Everybody has important, significant others in their lives. And it's really important to get those conversations going. Very, very important early on. And to keep them going, because what you think one year is not necessarily going to happen after a young couple has kids, for example, or after a parent dies and leaves you a legacy. You really have to keep on tweaking that and keep on thinking about it, or after you lose a job, or when you're thinking about when can you retire. So those goals don't stay frozen. You got to keep thinking about them, got to keep tweaking them, and you got to keep making those adjustments. And having people that are close in your lives, your partners especially, the partners in your investments and in your life, keep you honest and keep you on target, and keep making those target practice. Right. Keep practicing.
All right, Rachel, thank you very much. We have to leave it there. Rachelle Taqqu, thank you.